Autism sprinter, think equity, yeah. It's time to give the power back to the people. We're fighting to make our beliefs equal. Look at the failed policies and how they treat you. We got strength, yeah, we're far from feeble. This is for anyone with autism or a disability. Time to unite, show them how strong our will can be. Move readily, we're promoting equity. A non-profit platform, that's the recipe. Now throw your hands up, we finally got a winner. Think equity with autism sprinters. Now throw your hands up, we finally got a winner. Think equity with autism sprinter. It's time to make a change. It's time to stand up for what we believe in. Equality and equity across the board. No matter your race, nation, or creed, disability, or your needs. Yes, it gotta be equal. It gotta be right.
What's up, mi gente? How are you? I hope everyone's having a good Sunday. Here in Massachusetts, y'all, look out your window. It's snowing, okay? In March, it's snowing. Yes, it is here in Massachusetts. So we're here today with someone who is super dedicated to the community, has been around the block in a lot of community organizing, has a level of expertise that us parents need to know about. She is here because she wants to help families who have loved ones with disabilities make sure that they know how to file their taxes and the information that they need to make sure that they're maximizing as much of their returns, right? And she's also, and she'll tell it herself, she's also a candidate for the Boston City Council run that's coming up. And I'll let her talk to you about that. So I'm going to bring on Angie Camacho. So again, you guys, she is, she's worked for ABCD. She has a lot of knowledge in community organizing and advocacy, and we are truly humbled to have her here with us today and helping parents like myself figure out this tax stuff, because with all the stuff that has been happening with the previous administration, now we have new administration, some things have changed. I need to make sure that before the last day of filing taxes, I know what I need to make sure that I fill in when I do my taxes. What's up, Angie?
Hello, my dear.
So thank you so much for joining us. Introduce yourself.
Hi, everyone. I'm Angie Camacho, Angelina Magdalena Camacho, Remo Santiago Velasquez.
Right?
Usted lo sabe. No, but Angie Camacho for short. My father was a veteran, and you know what they did in the Army. They took all those last names and they Americanized it. So that's how I'm known to some as Angelina Camacho and others Angie Camacho. And either way, I'm just happy to be present, happy to be serving, and happy to be here. So thank you, Jaida.
So, all right, let's get into it, right? Because around this time of the year, I get a lot of parents in our Autism Sprinter Village who are trying to figure out what they can write off in their taxes, what is not a write-off. And then with all these changes with this new, with the previous administration, now we have a new administration. I think that there has to be a conversation of making sure that before our last day, which I probably don't even know, filing taxes, that we know what we need to know, because I don't know about my taxes either. So talk to us. Let's start. Let's get this conversation.
Just jump in. So I'm glad that there are some of you who haven't filed yet, because what has hurt my heart is how much people are paying just for basic tax prep. I've heard stories up to $900 for what you could do for free. And we'll talk a little bit about that towards the end. But right now, I just wanted to let you know that I'm a family member myself. I'm a mom. And, as you can probably tell from the family games in the back, making sure that our families take full advantage of what's free is for me, right?
Free 99, y'all. Free 99.
They don't call me Bargain Betty for nothing, okay? I'm telling you. So for those of you who have not filed your taxes yet, please, let's demystify that for you. So I'm going to go ahead and I'm going to share my screen, and I'm just going to do a couple of things here. Here we go. Share screen. And I'm going to share everything on my screen. Share. All right. And there's no audio. So hallelujah. So what, can you see that? It should say, let's talk taxes.
Yep.
Awesome. Awesome. Okay. So when we think about how how our tax return works, it's very, very simple, right? There's income from a number of sources, whether you have earned income, or whether as an employee or self-employed. There are certain types of unearned income after a certain amount that becomes taxable, like gift taxes, etc. But we wouldn't be here if we were wondering about that situation. So really, for most of us, it's about how we have earned income either as an employee or as a self-employed individual.
Mhm.
After that, the IRS looks at a number of things that you can adjust off of your taxes. So say, for instance, you're still paying for student loans. The interest that you pay on student loans at the end of each year is something that you can adjust. Or if you're an educator, once upon a time, you could you could deduct up to a certain, take an adjustment up to a certain amount. Then they have deductions, right? Deductions are things that you can take off of the money that Uncle Sam can take a chunk out of, right? The biggest one that we talk about is whether you get the standard deduction, that's the amount that the government already gives you off based on your filing status, or whether you're going to itemize. Itemizing, people like to do it a lot, but you really have to be careful about that, because unless those expenses meet certain criteria and unless they are more than what the government already gives you, it's usually better to take the standard deduction. And itemized deductions can get complicated. For instance, if you were working for your employer and you had a lot of miscellaneous work-related expenses, those have to be more than 2% of your income in order to even be included on your itemized deduction list. Similar to medical expenses have to reach a certain percentage of your income, and it's also based on your age before it could even be included in your itemized expense list. And so it could get a little tricky. And sometimes people like to go ahead and say that they're going to get you a big refund by just doing nothing more than puffing up your itemized deductions. Please don't do that. That's just a recipe for disaster, especially when the IRS tags it and you have to pay it all back.
Mhm.
So then the one that really gets tricky are credits, because some of them, credits help to reduce the tax due. So once we take all the adjustments and deductions down, we look at the tax bracket, right? You get assessed a tax. That's where credits come in. Credits help to reduce the tax due. So some of them are refundable, meaning if you get down to zero, you still get the remainder of that credit back, even either all of it or up to a certain amount. And some of them are non-refundable, meaning that use it or lose it, right? They either help or it goes away, right?
Mhm.
We also look at the biggest credit that you get, the amount of money that you have paid in withholdings. And that's always a subject I get a lot of questions about. Between the payments that you've made in withholdings, or if you've been paying quarterly for our self-employed people, and the amounts of credits that you get, if those numbers together exceed your taxes, you get a refund. If you don't exceed that number, you have an amount due. And so what really starts all of this off is whether or not you have to file and whether or not you have dependents you can claim, because all of that fits into two categories. One, there's mandatory compliance rules for those who must file a tax return no matter what. And then the other part, your dependents, it tells us what your filing status is. And so we have a number of filing statuses. You can either be single, you can be head of household, you can be married filing jointly, or you could be married filing separately. Okay. And so those are, the single, of course, it's you, right? That is not to be confused with head of household, because on other applications, if you happen to be the one who's in charge of your household, then you're head of household, right? Not here. Head of household means that there's someone in the house that you're holding responsibility for. That's the easiest way to put it. So if there's not a second person, you are never head of household, okay? You would be single. Now, if you're married filing jointly or you're married filing separately, right? Married filing separately is almost always the least advantageous tax filing status to have. So, what the IRS always allows you to do, if you qualify for more than one filing status, you're allowed to take the most advantageous one. So, for instance, some couples might have one member who has a child support obligation, and they're not exactly sure about being protected as an injured spouse. There's a whole form around that, and we could talk about it later if anybody has any questions about that. Sometimes they'll choose to file separately, and the one who has the child support obligation would be married filing separately, and the one who doesn't have the obligation would file as head of household with the dependents that they're taking care of. Now, there's some rules around that in order to do that properly. But it's also not the best way to do it, because what ends up happening is the other partner, instead of an injured spouse situation, ends up taking a bigger tax hit. So as a household, you actually end up with less money coming in. And not to mention the child support obligation still keeps growing in interest and will eventually affect the household somehow. So you have unique rules like that come up all the time, right? And then you also have to be careful about dependents, because if you improperly file credits with dependents who are not yours, again, it could be tagged by the IRS. You could be asked to pay all of that money back, plus penalties and interest from the date that the taxes were due, not the date that the auditor finds it. And on top of that, there are certain credits that have multi-year penalties that go along with that.
So guys, listen, don't be claiming nobody's kids if they ain't yours.
Right.
Don't do it.
Right. So that's where I'm going to, if you have any questions, the IRS actually has a who may I claim as a dependent, right? Because there was a time where, it was easy to buy someone's social security number, or, you think, well, I can't get that credit, so let me make sure that somebody else gets the credit for my kids. Guess what, people? When the IRS is getting better and better and better, and if the IRS doesn't catch it, the state does. The state is really on top of that. And so what ends up happening is you have to pay all that money back. Then you've made a deal with someone. And guess what? Chances are you're probably, that person who has either made the deal is either out of that money, or they're coming after you for all that money. And it just gets really sticky, because nobody's going to want to say that they committed tax fraud. And that's what it is. So please be sure that you know who you can claim as a dependent. Use the IRS website. It's chock full of information, and year after year, they get better with tools to tell you what you can and cannot do. Right? Some of the family credits that really, really confuse people is the child tax credit and the dependent care credit, right? So you have a credit just for having kids. Right? Just for having kids. Like, once upon a time, it got really confusing, because we used to have not only credits and deductions, we used to have exemptions, right? But right now we have a higher standard deduction, and then these other credits that fill in, right? Mm-hmm. So if you have a child dependent up to their 17th birthday who fits the requirements to say that you can file them as a dependent, usually means they've earned a bit under $4,300 for this tax year. I believe that's the number. It used to be tied to the exemption amount. So it's close to that thinking. And the key is they lived with you for more than half the year. And if there's any split between who lived with the other longer, it's the number of nights that a child lays on the pillow in one or the other parent's house. Now, this is not talking about the years that you happen to have special agreements with who can file the child versus not. Generally, if you have a judicial order, you have to follow the judicial order. But if you don't have a judicial order, it's the number of nights the child is on the pillow, right? So if that child lived with you, you paid for the cost of the household, and In cases where you have a partner, you earn more money than the partner. So technically, that's how they deal with support. And the person is not earning enough money to cover their own expenses, then that child is yours, right? For the sake of tax purposes.
So I have a
So,
question.
yes,
So
ma'am.
if children, there's these custodial things because life is life, right? And
Mhm.
1 week, 1 week is my turn, 1 week is dad's turn. In situations like that, like who who can claim this child, or
The
should it
num- no, go ahead. I
would
stopped
it
you.
would it have to be like, obviously more conversations with the co-parenting and that situation?
Mhm.
Um, can they both claim the child?
No, they both cannot claim the child except in situations where there are certain credits that only the custodial parent can actually claim the child. For instance, the dependent care credit that's on the screen, only the custodial parent can claim the dependent care credit, right? The EITC, if it's basically a situation where ideally you go by the rule of the number of nights, right? So if it's 1 week here, 1 week there, there's 52 weeks a year, right? You would think that's even, and that causes a problem, right? Chances are the one or the other parent has the kid more than the other, right? Like, especially in the cases of default parents. Paying child support, unfortunately, because it does not create a 50-50 split, does not automatically mean that the parent who's paying child support automatically has rights to claiming the child as dependent. And so what's best in a co-parenting situation is to have a good conversation, right? Especially when both parents are contributing equitably to the care of the child. It's always a great idea to be able to work that out before it has to get to court, because there's a lot, for all of the stories we do here, there are a lot of good co-parenting relationships that work to the benefit of the child. And so it's always a good situation where you can have that conversation. However, if you can't have that conversation, it's the number of nights. And then if you still can't have that conversation, then unfortunately you can have the courts figure it out. Right. Did that answer the question?
Yeah, that was yes, yes.
Oh, wonderful. The child tax credit is up to $2,000 a child. Again, up to their 17th birthday. The fun part about the child tax credit is that if you don't have any taxes due at the point that we start calculating credits on your tax return, a portion of it, as long as you've earned at least $2,500, meaning you've worked and were paid, either in some directly as employee or self-employment, were paid at least $2,500. The amount that remains, up to $1,400, comes back to you as cash, right? So you could either get up to $2,000 per child, and that would take down the taxes that you owe. Again, if there are no taxes due, a portion of it, up to $1,400, comes back to your pocket, right? So that's an example of a refundable credit. The dependent care credit, however, right, is $3,000 for one child, or up to $6,000 for two or more qualifying children, right? Or qualifying individuals, excuse me, because it's not just children. It's a child up to 13 years of age, or a spouse or dependent of any age who's earned under $4,300 and they are incapable of self-care, right? In both of these cases, I'm sorry, in any of the cases regarding the dependent care credit, if you receive funding help, like you took an FSA out, those are pre-tax dollars, you can't include that in this amount. Or if your employer helps to pay for dependent care, you don't include the amount that you receive support for. Right. However, that is a non-refundable credit. It's use it or lose it. Right. So if you don't have any taxes due, it's not going to help you any further. right? The biggest one, and I love sharing this one with differently abled families because I happen to be differently abled. I'm in that community. So it's our community. I love sharing this little tidbit. It's my favorite one. You can probably tell from the smile on my face that it is great for our families to understand how this really works. Is the earned income tax credit. Individuals who are working and either are single or have no children all have a chance to receive a credit that kind of brings us a little bit more competitive, right? You worked hard all year. You weren't earning as much as as people and in the competitive market. And basically what the government does is say, we want to help you get into the pipeline again, right? And so they came up with this earned income tax credit. It is a reward for working. And if you've been struggling hard all year, this is a great credit if your work income has not matched the amount of work you've been doing. Okay. So if you don't have any children, right, and you're single or head of household or widowed, you could earn up to 15,980. Sorry, widowed is the fifth filing status. My apologies. 15,980. The maximum adjusted gross income, if you have no children, is 21,920, and you can earn. It's a small credit, but still, some money is better than no money. It's $543, right? And based on your filing status and the number of children and your income, it kind of works like a bell, right? If you work a little bit and you earn a little bit, there is a small credit. As you work more, right? As you work more, there's a middle credit. That's the maximum you're going to get, right? Because you've been working so hard, but you haven't been as competitive as an earner. That doesn't mean you didn't work less than. It means you've been working really hard, but you just haven't been earning competitively, right? The maximum credit, depending on the number of kids, if you have 3 or more qualifying children this year, is $6,728, $6,000. It's crazy. Then as you start to earn more money, right? As you start to earn more money and start to, if your wages are closer to, what the competitive wages are of other people, then the credit goes down. So it doesn't just drop you off a cliff, right? It helps you have a little bit of an edge, encourages work all the way up to the maximum amount. And then, as you're starting to get into the pipeline of competitive wages, then it just kind of brings you down gradually. Right? It's not like a lot of resource credits where, you're doing great, you're getting this help and then boop, you hit this number and then there's no help for you. That's not the way it works. However, the key part here is when we're talking about children, right? Oh my gosh, that nice little typo, it's killing me. When we're talking about children, right? We're not always talking about children. If you have a family member who would not otherwise qualify as a child dependent for other reasons, and forgive me, I really can't stand this language, but I'm happy we're getting the money, so I'm not going to make it a big deal. If you have an individual that would not qualify as a qualifying dependent and qualify as a child for EITC purposes, they might qualify as a qualifying child for the EITC. Let me explain. So you have an adult who otherwise meet as a dependent for other purposes, lives in your household, earns under a certain amount, etc. But they are not of age. They're over 17, right? So they can't be your child. However, they can't work, right? They can't constructively work. What the government says is that if you're the one taking care of them in the home, even if they have some earned income, if you're the one taking care of them in the home, they realize that if that person can't get the credit, then that credit it should be claimed by the household that is taking care of that family, that's taking care of that family member who cannot work for themselves. In that case, that person, that adult disabled person or differently abled person, could, in certain circumstances, qualify as a child for EIT, a qualifying child for earned income tax credit purposes only. Isn't that great?
So this is interesting, right? Because I know that a lot of the things that we get in Autism Sprinter every year is literally almost the same questions. So if with what you're saying, so if I had to make accommodations to my house, right? If I have a wheelchair bound child and I have to make all these accommodations in my house, are these things that I can claim in my taxes?
So the accommodations, or those would fall under medical expenses.
Yeah.
And so that would end up, depending on how much that cost you, the medical expenses that you would incur would go under itemized expenses. The threshold changes each year. If you're under 65, it's one amount, and then if you're over 65, it's another amount. Usually it's somewhere around 10% and 6 to 7% if you're over 65. But basically, what ends up happening is if all of your itemized deductions exceed the standard deduction, then you would take the itemized deduction instead, and so that would give you more. It would give you more money off that Uncle Sam can't touch, basically. Mm-hmm.
This
And we're
is interesting.
Yeah, we're gonna get there. We're gonna get there, right?
Where's
So
my Timmy? I haven't received mine, so I'm gonna need Biden to listen. Leave me chavo, man. Estoy pela por aquí.
So if anyone has any questions about how to look at their itemized deductions, I'm happy to help. But the one thing that I also want everybody to know is a lot of times when we're talking about the itemized versus standard deductions, a lot of people contribute to like church or the foster kid program where you donate your car or something like that, or they donate to Goodwill and they get those little slips of paper, right? And they say, well, wait, where's my deduction for this? Like, how do I not get this? Well, in prior years, it used to be that's the only place you could itemize, right? On the itemized deduction list. However, this year, if you have donated to either a place of faith or a charitable organization, you can actually take off up to $300 as a deduction, as an additional deduction, without itemizing. So everyone, if you have not filed your taxes, make sure you do not. If you have been giving to a charitable organization or place of faith, make sure you get that $300 off as a deduction this year. Don't let your tax preparer, or if you do prepare your taxes yourself, please make sure to give yourself the credit that's due to you. Okay. So even if you have contributed, please make sure that you have taken off that $300. Very, very important. I always say that pennies make dollars, and losing dollars doesn't make any sense. Definitely not in my book. So the other part of taxes this year is the stimulus, and everybody's confused about how a stimulus works, right? So prior to the tax season, it's considered the stimulus because it's an advance credit that helps to stimulate the economy, right? And so what happens is that it is assumed, similar to the advance premium tax credit for health, right? It is assumed that you qualify for it, right? And so these checks went out. The first check went out for $1,200. The second check went out for $600. We'll talk about the $1,400 check in just a moment. But the $1,200 and the $600, if you got it, please do not count it as income on your taxes. That is not income. It's already accounted for in the credits section of your tax return, right? Now, if you did not get the $1,200 or you did not get the $600, then what you do is you actually report that on your taxes, because now it is a tax credit, right? So if you got the tax credit, it just zeroes out because you're not due anymore, right? If you did not get it, this is where you would report the fact that you didn't get the $1,200, right? And so based on your filing status, the number of dependents that you report, then that's, that would determine how much you're actually getting as a full credit, right? And so that's the reason why the tracker does not work for that $1,800 anymore, because now it's part of the tax system. So if you did not get either the $1,200 or the $600 and you don't otherwise have a requirement to file, I have been helping some of the members of our differently able community to file their tax returns, because they are filing a non-compliance return simply to get the credit. Okay. And that's the way the IRS wants you to do it. Don't call them 10 times, don't call them 50 times. That's not going to change it. The answer is still the same. If you did not get the $1,200 or $600, you have to file a tax return in order to get it now. Okay. And there's no agent on the 800 line that can help you do anything else.
Because you can sit on the phone, you'll be waiting for a few hours to even speak to somebody in the first place.
Right. You'll be waiting a couple hours just to be upset for them to tell you file a tax return.
Yeah, and that only takes 5 minutes, but
right, especially if this is all you're filing for, right? Super simple. So now this is $1,400 that President Biden signed, and he signed it early. That's how I knew these checks were coming out this weekend. Some people are dancing on the ceiling because some people actually got the money this weekend. So the tracker now will tell you how much you'll be getting. Not how much you'll be getting, when you'll be getting it. So we do know it's $1,400 per person. So I am pretty stoked because I checked the checker for mine, and I'm getting mine by March 17th. So if you have not checked, the tracker is active. I know they said it'd be active on Monday. No, it is active today. I checked yesterday. So if you want to know when you are getting your third stimulus, you can go ahead and check the tracker. What's always best is whenever you file your taxes, please select direct deposit. It is the fastest way to get your money. Some people do want to get a check for their own reasons, and that's fine too. But the part you have to realize then is that the IRS is going to send you the little debit card, right? And so you'd have to be on the lookout for that debit card, so that and also it won't be the first round of payments that they're sending out. The first round of payments they're sending out right now is for direct deposit. And so you would be in a different round, and that's okay too. Just know when your money's coming in, so somebody doesn't swipe your plastic, because check and the debit cards are the most sought after thing, because the look of the check has not changed in eons. Everybody knows what it is, and if you think fraud doesn't happen with tax checks, think again, right? Mm-hmm. It's crazy. What is most important is please know that you can file for free. Most of our tax returns are easy enough to do with just a little bit of time and patience, right? If you have earned under $72,000, the IRS has even put together some providers under what's called the Free File Alliance, who will make their sites accessible to you for free, just for looking it up under the Free File Alliance, right? What you should do is, and I'll show these to you in just a moment, what you should do is look for services that give you both the federal and state free. There are some sites that do prior year returns. And so prior year returns cannot be e-filed. They would have to be mailed no matter what. But finding someone who could do a prior year return for you is like finding a needle in the haystack, and always when you find them more expensive. Okay. So the Free File Alliance even has a provider, OLT, it's called Online Taxes, that will allow you to prepare and print your prior year tax returns. It's always free to do the federal, and to do the state, it's only somewhere between $7.95 and $9.95, right? So it's a much more affordable option if you are a little bit behind on doing taxes. If I wasn't running for office, as many of you know who might be listening in, I am known as the tax lady. I've been doing taxes. My dear sister is like laughing in the back here, but I am known as the tax lady. I have, even after leaving ABCD, I could not leave the community need. And so, I can't do it now. I'm so sorry. I love you guys. But I had to reduce my circle to a few people who just have always been, family, and my seniors, because our seniors who are homebound right now, they really can't get out. So to the extent that I can help, that's where I had to help. But I can always share some key information with you about how you can do it for free. And in a few cases, I before we got ready to kick off, I was able to walk some people through it, and they were like, "Oh my gosh, I can't believe I had stocks and bonds and I figured out how to do a Schedule B. Oh my gosh, I can't believe I had a Schedule C and it was just that easy." It takes a little bit of time and patience, but you can do it. And more importantly, you can do it for free or near free. So I'm just going to switch over to a few things here. Where's my, there. I think that's it. Oh, come on. We're going to figure this out. We're going to save that because I did not save it. And then, there we go. So the IRS website, as I said, has so many tools. And I don't know why that publication is not showing. It's not loving me. Okay, we're gonna find one that's up.
Right. The
internet. You see, I had all this loaded. I don't know what's going on here. Is that because it's not loving the StreamYard thing?
Possibly. I wouldn't doubt it.
Okay, so let me see if comes up. There we go. We'll start here. Okay. Yeah. So the other tabs that I had up were just some tools about how, on the IRS website, how you can figure out if you have a dependent, who should file, who might want to file. Usually who might want to file, honestly, it's people who are due a credit that they would not otherwise get without filing a tax return. So say, for instance, you had withholdings that you took, but you don't have a tax requirement. You want those withholdings back. It's your money, right? And then the other thing about withholdings that gets very, very tricky is how much should I claim in, in allowances and exemptions when I'm filing my W-4 or M-4, right? Because those forms determine how much an employer takes out of your taxes. And if you don't know how to calculate those, you end up giving the IRS an interest-free loan. People think that the biggest refunds is the biggest win. Not necessarily. If you don't know how to adjust your withholdings based on what credits you have to get more than $1,500, and again, we're not talking about EITC. EIT is a different animal altogether. But for those who are not getting the EITC, you really want to either have no more of a liability or no more than a gain of about $1,500, because and that's really, it really depends on whether you want to just go ahead and put that money in your bank account during the year ahead of time, so that you only pay the liability that's due, or if you, like me, don't want to owe anything ever in life to the government. Because God knows that we can have another conversation about credit, right?
They will come for you, and they'll come with all types of fees and everything.
Right. So I believe in not paying interest on my credit cards. I also believe in not owing Uncle Sam anything. So what I do is I calculate my withholdings, understanding what credits I'm expecting to get for the year. And usually I'm somewhere around $1,200 to $1,400. And I use it to pay for certain insurances that are coming up around this time of year, my excise tax and my museum memberships. And that just happens to be family values for me. Anything much more than that, and again, this is if you're not claiming the EITC, anything more than that is really giving the government an interest-free loan. So you really have to think about, even though the forms will tell you, oh, well, list one if for you, list one if you're head of household, list one for every single one of your children or dependents, and then you could claim like some number anywhere between 3 and like infinity and beyond, right? You want to be careful about what you actually put down, because the first part of the form just tells you all the allowances that you may be able to claim. The second part of the form is how much you're actually claiming. Okay. And so the question always comes to me, well, Angie, what number can I put down? I can't tell you. I'm not allowed to give tax advice. I can only give you tax information. There's a difference, right? I can tell you that what I do is I always file one under the number that I'm allowed. So I'm allowed 1, 2, 3. So I generally do either 1 or 2. And so if you have multiple streams of income, I usually do, with the years that I've had more than one job, I've done one more. So in general, depending on the year, I do 1 or 2, expecting my expenses, credits, or etc. And then if I had more than one stream of income, I would just make sure to go down one more. So it would be a 0 or 1. And that's just so that, again, I'm adjusting. The other thing you can do is use the IRS website because they do have withholding tools. And I don't know if many of you know, but you can actually adjust your withholdings with your employer mid-year or pretty much any time of the year. So if you're tracking and you're looking at your payroll stub and you see that your year to date on the tax withholdings is a little high, go ahead and fill out a new W-4 M-4 so that you can slow down on that a little bit towards the end of the year and balance out by tax time. The one thing that you don't want to do is you don't want to underpay past 20% of the taxes due, because then there's a underpayment penalty. So you don't want to do that. So that's the only part that can get a little tricky. But the part that's not tricky is this nice little free file alliance that can help, right? So this it tells the IRS again pulls these together, and why these IRS pages are not loving me right now. Oh, here we go. Look up. So one of the tools is within the Free File Alliance is a lookup tool, right? You would put in your filing status, you'd put in your age, and you'd put in the adjusted gross income. Your adjusted gross income is basically just take all of your income documents, count that number up, put that number in. If it's under 72,000, then you could use the free file system. Okay, and so it'll ask you a little bit about the types of income you have, right? Because like things like H&R Block, they will charge you for a Schedule C, right? Whereas other services don't. Okay. Also, certain ones are only free if you're under a certain amount and earn the EITC. Some of them will give you free state. Some of them will charge you for the state. Some of them are free for military or veterans. And then once you answer all the questions, by the time you get to number 7, it will tell you all of the free options in this alliance with the IRS that will allow you to file yourself with a little bit of time and dedication for free. So that is basically the long and short of it. And I hope some of this information was helpful, but I'm open to any questions that people may have. I'm going to go ahead and stop sharing so I can see you wonderful people.
see. So, all right. So it looks like, I think that we talked a little bit about this, and I think you touched upon it. One question is, what are tax write-offs for families receiving SSI, SSDI, DTA benefits, or, government assistance? But I think you talked about that already as far
I
as,
did, yes.
yeah.
Yes.
Yeah.
So the
And
big one is the earned income tax credit, making sure that if you have a child, in general, under 17 meets the other dependency requirements, always look to see if you qualify for that EITC. And then if you have someone who's older than 17, but is disabled, or differently abled, and they can't claim the EITC, you get to claim that EITC for them, right? Well, because you are supporting them rather, right? So the big one is the earned income tax credit. The other one is to make sure that you are calculating all of your medical expenses for those families, right? So anything, for those families who are, my situation, I have some expenses, but not enough to itemize. And so I'm blessed to be able to manage my situation. But for some families, it costs a lot of money. The biggest thing that you can do is tracking. Tracking is your biggest friend. If you're using like a mint.com or any of the Dave Ramsey tools, budgeting and tracking your expenses related to your medical care and concern of your children is going to be your best friend, because that will tell you whether or not you can itemize or whether or not you just have to be stuck with the standard deduction. Because the way the IRS looks at it is that the taxpayer has the responsibility for that tracking, right? And if you cannot provide proof, then you have to be stuck with what they give you. And for a number of families, that could really be the big thing, right? And the other thing is, when we're talking about the dependent care credit, making sure that our families know that it's not just for the children, it's for a spouse or qualifying relative who's incapable of self-care. Most people think that the dependent care credit is just children. Most people think that EITC in all cases is just children. No, it is for older dependents who are incapable of self-care. And so just understanding those key nuances that the IRS doesn't make as clear can mean hundreds or even thousands of dollars for families who need it most.
So I know this is probably one that you've heard, and a lot of parents nationally are wondering the same thing. Since most of us became teachers' aides, we like homeschool, our home turned into a homeschool, school, right? A lot of parents were asking, are things that can be written off, such, due to this remote learning life, like printers, laptops, headphones, and other materials needed to create a successful home learning, remote learning experience? Are those things, including Wi-Fi, are those things that families could write off? What if it does? Where would it fall under?
Oh, I'm so sorry. I'm so sorry.
The question is no. The answer is no.
Yes, I'm so sorry. And I know, because if I showed you, right, and for safety reasons, I wouldn't show my whole home right now, but I can tell you, to my right is an exercise ball and a rebounder, because my kid can't get, out, out and around, or during the shutdown days. That was essential to his mental health, right? To have some level of activity. On the other side of my wall, I have like a little basket of different supplies. Behind my television, I have a huge dry erase board that can go up on the wall. I mean, there's practically a mini classroom in here. I actually had to convert my living room into, well, it's actually redundant. My living room is refashioned to have convertible space, right? So I have 2 mini 9 cube sidewalls now. one that holds all of our exercise equipment, one that holds all of our supplies for like school printing, whatever. My sister here will tell you I have a full-size copier up in this choker. I kid you not. Oh, she's laughing in the back. She couldn't hold it. I mean, no, but seriously, I was blessed. I was blessed with a full-size commercial copier because it's expensive. It's expensive. All of that wet ink, cartridges that you have to buy. And so if my friend didn't actually bless me with that copier, I couldn't tell you how much more it would cost just to do the everyday printing, it's even the schools who have gone to electronic resources, that's only for certain families. There are families who need to be able to print out work, who need to be able to have manipulatives, etc., that are paper-based, and it's a huge cost to us. But I mean, honestly, it's something we have to advocate for because we had to fight every year just for the educator adjustment, right? The educator credit was only a couple $100, and we know for those of us who have raised money for schools, right? Raise money for Nathan Hale, raise money for the Hurley, raise money for the Hernandez, because that's where our kids are and the need is great. I mean, we're talking about everything from pens to, unfortunately, not to be TMI, toilet paper, right?
Yep.
I mean, we know that there's a huge disparity in certain schools about what's made available. And the current tax system has not accounted for that. And even though there have been a lot of supports like pandemic EBT dollars, etc., it has not captured the full cost of what it takes to educate our children at home.
Absolutely not. Well, it's going on the hour. So tell us where to find you. And, again, you running for office. So tell us what district seat you're running for. Tell us a little bit about your platform and how you incorporating those with who are differently abled. And let us know where we can find you. And if anybody's interested in, following your campaign and joining your campaign, tell them where to do that at.
Thank you. Honestly, I'm running because experience matters. There's just no other way to put it. Jahida, you and I have been in this fight for a long time, not only for families of all levels of need, for issues that all of our residents are facing. And I've been a fierce education advocate, mainly in the public sector, but I am not anti-charter. I'm not, anti-parochial. I'm not anti-Medco. I'm pro whatever makes the most sense for our parents and their children's needs.
And I appreciate you saying that, not to cut you off, because I feel like, not to get off subject, but I think that parents are always placed in the middle of this beef, as I call it, because it is beef, where parents are put where they have to choose, or, some people feel guilt, some parents feel guilt because they hear this whole conversation about money's being taken away from the school. And I think that for most parents like myself, and like you said, that doesn't really necessarily matter to us. What we're caring for is that our child, wherever they are, can gain access to equitable education. And no one should determine what that looks like because of whatever other things are going on, because the average person and an average parent really doesn't even think about that.
Right. And so, I'm absolutely a strong supporter of public education because that is the most accessible option for all of our children. But that existed even before I had my own kid. I was with Boston Parent Organizing Network from the days when even my nephew was in the schools. And the reason why I've been so focused on our young people is because they're the new workforce. They're the new emerging voters. They're the ones who are going to have to make decisions to keep our communities growing and thriving. And if we don't prepare them, if we don't bring them along early, then we can't expect them to know what to do when they get to our age. So all the work that I've done has always had a youth component to it. Even when I was doing demonstration disposition in affordable housing, we were the only site that actually had a demo funded youth program. And it wasn't because they funded youth programs under that, because HUD absolutely didn't. We wrote it into the security and family self-sufficiency plan. So I've been committed to making sure that we're not just talking about theory, we're actually building opportunity. And right now, the reason why I'm running is because with all the wonderful lifting up that's happening with our mayor and our current city council president, our district is going to be without representation. So we can't talk about theory and good ideas and little focus groups because gentrification is hitting us. We're dealing with ambiguous trauma. Our seniors have been isolated and they're dealing with levels of depression. Our children are dealing with levels of all kinds of stress. And again, the trauma of being separated from the socialization that they've been learning to have since kindergarten. And our families are struggling to just try to manage work and this new pandemic life that recovery is going to take a long time to come out of. And not to mention the mental health crisis that is sure to follow if we are not careful. And so my name is Angie Camacho. This is just a few minutes about the everyday work that I've been doing. And it didn't stop just because, I ran before for office, and I'm currently on the ward committee, but it's an everyday part of my life. I plan to continue it, but hopefully I will have your support for City Council District 7 in Boston, Massachusetts.
Woo woo. So what district is this, and what communities it reflects?
District 7 covers Roxbury, North Dorchester, Fenway, and a teeny tiny bit of the JP Roxbury line up at the end of Columbus. So that's generally our area.
Okay. And
did I mention Jamaica? Yeah, I mentioned Jamaica Plain. Okay. So, I can't.
Guys,
parcels are important, huh?
I know, right? Because sometimes I'm like, listen, it's too much. That's a lot of ground to cover. But guys, Angie Camacho, her email is scrolling at the bottom. So
CamachoForCommunity@gmail.com. Also available online, CamachoForCommunity.com. Our pre-launch website is up right now, but you'll be seeing the launch this week, with our colors, our logo. We're so excited to jump in, and then of course, we are connecting with a media outlet to do the exclusive launch. So we're excited. We're in this. We've been committed. Team Angie is ready to go and be the community's voice for the issues that we're facing, because government can start to work for us.
That's right. That's right. Thank you so much for your time. I appreciate you, and I look forward to seeing your campaign unfold, girl. Good luck. Good luck.
Thank you.
All right, guys. Good night.
Good night, everybody.
Autism sprinter. Think equity. Yeah. It's time to give the power back to the people. We're fighting to make our beliefs equal. Look at the failed policies and how they treat you. We got strength, yeah, we're far from feeble. This is for anyone with autism or a disability. Time to unite, show them how strong our will can be. Move readily, we're promoting equity. A non-profit platform, that's the recipe. Now throw your hands up, we finally got a winner. Think equity with autism sprinter. Now throw your hands up, we finally got a winner. Think equity with autism sprinter. It's time to make a change. It's time to stand up for what we believe in. Equality and equity across the board. No matter your race, nation, or creed, disability, or your needs. It gotta be equal. It gotta be right.